Good morning, everybody. This is Kirk Spano and the return of the Retirement Income Options Monday webinar for option sellers. We had been doing stocks of the week and retirement income options kind of mushed together, but I am unmushing them, and we are going to have retirement income options as well as Kirk's Stock Talks. That's right. I'm going on TikTok. And what I'm going to do in the future is break down our stocks in 5 to 7 minutes for a TikTok video, but also here on YouTube. And you'll be able to find them very easily because it'll just be the name of the company in the title. So if you want to find AT&T, or you want to find New Fortress Energy, or you want to find a Metis, you'll just look up here and you'll see, hey, I want to see the 5 to 7 minute clip on a Metis or Unity or PayPal or whoever we're doing that week. And I'll do 1 or 2 a week. Probably we'll try to get up to 3, but who knows if I can do that many. Just so many minutes in the day. And then the retirement income options will be down here. And I'm going to have them all pretty simple. Just going to give you the names, the symbols, the main symbols that we cover that day. So very easy to find online now. Here is the retirement income options article. It's at both Margin of Safety Investing and Fundamental Trends. And I will use this one because I think it's a little easier to read for me. They're probably pretty close though. It has to do with the third columns. I like the white background for doing the video. We're going to go through our top cash secured put and cover call ideas every week. We really want to focus on the plug and play stocks, but I will also go to the broader, very short list, which I have been updating over the last, I'd say 2 weeks. You will have seen that I've reduced the size of the very short list by about 20 companies. And I'll probably reduce it by about 20 more. So I already got rid of some growth companies. I got rid of a lot of the biotech stocks because I just wasn't sure when they were going to be profitable or if they were going to be profitable. I stuck with the very best ideas. I got rid of a bunch of the Kathy Wood ideas. If you really want to get her basket of ideas, then you should probably just buy her biotech fund. And that would probably be the best way to efficiently have them researched if you trust her to trade them, which I've lost a little bit of faith of in the last 6 months. I don't think she should have had to take such a big digger, but she was stubborn, and she didn't have to be. But that is the nature of the financial industry, is that the stubborn people lose. All right, so here is this week's piece, and we're going to cover AT&T, Zoom, PayPal, Heron Therapeutics, Coinbase, Abbv, Nutrien, Newmont Mining, and Occidental. So I hope you read the article. I know it's only been up about a half an hour. We're going to start every week by doing a screen using TradingView to see what is oversold or overbought. So this is the oversold screen, and I just cut it off to see these things. So here's your last price, the oscillators rating, which there's about 10 oscillators, and then it gives you a cumulative rating, relative strength index. This is the relative strength of the trend is what it is. And you're looking for a number that is either high or low. So if the number is closer to 100, that means the trend is very strong. And if the number is below 50 and closer to the 30s and 20s, the trend is pretty weak and could be reversing. And this is called their awesome oscillator. And it is a combination of a bunch of their other oscillators to give you another cumulative rating. But you know, the shortcut is the RSI, and I'm using a weekly time frame. So this is based on 14 weeks, essentially a quarter, right? A quarter of the year. I could even change this to RSI 13. I don't know if that would make much difference. This is more standard, easy to use. And then on my charts, you'll see here in a couple minutes that I use a faster version of it. What do we see here? AT&T, incredibly oversold. Shooter did a chart today in the chat room at Fundamental Trends, showed that probably it's got downside to maybe 17-ish, but then it's going to start a primary wave up. I did like his chart porn that he did. Where is that? I should actually pop that up. So this is a chart that he did of AT&T today, showing the long run super cycle going all the way out to the year 2100. which I thought was pretty funny. But I said that it's going to make a run at 60 sometime this decade. I think probably mid-decade. Why? Because on a valuation basis compared to Verizon, it just needs to normalize with Verizon. Because AT&T is probably a better company, and they're not valued like it right now. So what do we do here? Take a look at what's going on. Give you just a very brief summary of the stocks we're going to cover, and then the cash secured puts to sell. So with AT&T, guess what? There's not really any puts to sell. The premium is so incredibly low. It means that nobody is speculating on AT&T to go down much anymore. What does that mean? It means it's probably going to reverse. And the max pain we can take a look at. Let's take a look at max pain. What is max pain? Max pain is the price that something will gravitate towards for a certain option maturity. So max pain is 25. So that means with AT&T down around 19, the price is probably going to gravitate towards 25. Why is that? Because this is the spot where the market makers make the most money and the investors lose the most money or make the least. It happens over and over and over and over and over again. Almost like the market's a little bit manipulated, but also like supply and demand tend to rebalance and find equilibrium. Hey, an economic law at work. So if we know that the price is here right now, and this is roughly where it's going to go to based on the options, then we probably want to get into a position where you take part in the appreciation of the stock, which would mean either selling a put or buying the stock outright. Well, in this case, you just want to buy AT&T if you don't already have a position. And if you're a retiree and you're looking for a good 4 or 5% yield on something that's going to drift up for a long time until it gets more appropriately valued with Verizon, then AT&T, to me, is one of the top 5 to 10 dividend stocks in the stock market. And interestingly, as I've covered before, AT&T has a couple of things that the market doesn't value at all. And if they happen, if they end up competing with Roku, if they end up having an international network because of satellite coverage, AT&T's upside really, they could increase their revenue 4, 5, 6-fold over the next decade. That would be incredible. So from this price, you have almost no risk. You have a big dividend. You have pretty much upside or a mountain of upside. So either it's going to beat the market in total return by a few points, or it's going to crush it. It all depends on if those catalysts come to pass. Zoom, here's a good one. We have a chart on this one, and look at that. Way back here, at the end of 2021, I said that Zoom would get back down to this price level, and look where it is. Now, I base that largely on the institutional buyers. Where would the institutional buyers buy? And that's why I get these so right so often. Now, Shooter kicks my butt in this stuff, just crushes me because he trades a much shorter term time frame than I do. But remember, I'm a retail investor because I have to be. I'm registered. I manage other people's money. So I'm not always doing this. And people get mad at me. Well, why aren't you doing this? Why aren't you bouncing around and catching all these gains? Well, because the regulators don't want me to. And there's one group of people I don't want to cross, and that's the regulators. So at this point now, Zoom is super interesting. Now, could I have one more leg down? Absolutely. And people will get mad if that's what happens, if I buy it. So what I'm going to do is I'm going to sell a put just to get started. So my first entry into Zoom is not going to be a starter position. It's going to be selling a put. And why do I like the 100 for $9? Well, let's take again a look at max pain. Showing you this because it's something you should be using if you're an option seller. Max pain is right around $180. Okay, so if I sell a put for 100, collect 9, I have almost no downside, right? Because the price is probably going to gravitate towards 180. That doesn't mean it can't go down a little bit, do one of those jitterbug things. But if I can all of a sudden get Zoom at a price of 91 net, holy cow, look at that. That is right where I was looking to get it a long time ago. Wouldn't that be spectacular to get it basically close to its IPO price? I would love that. And if it did fall even further down, then I would either sell another put, depending on what my asset allocation was, or I would just buy the stock outright. for PayPal. Again, it's another company that has technology, and regardless of what narrative is today, remember, today's narrative has very little value tomorrow. Tomorrow's narrative has value today. Do you get that? Today's narrative doesn't mean much because it's already happening. It's backwards looking almost. You want to think about what's going to happen 3 and 6 months out and a year out and 2 years out. And if you start thinking that way, if you try to look down the road at least a couple quarters to a couple of years, which is fairly foreseeable, you're not going to get it right to the week or the month usually, but if you can get within a couple of quarters or even a couple of years sometimes. So if you're a couple of years early, you're probably getting something really cheap. For a couple of quarters early, that means that it probably is almost ready to go up, but you probably haven't gotten the lowest price. You have to decide, how do you want to play that game? PayPal here has a huge role in the future of money. Everything is going in the direction of easier to move money, whether it's online or through blockchain or whatever. And PayPal has been investing in blockchain a long time. They're probably going to end up being one of the companies with a stable coin that's in line with what the Federal Reserve and the regulators want them to do. Shooter says they have 2,465 patents. Yeah. PayPal has things that nobody values because nobody reads about them and nobody thinks about them. PayPal's upside is tremendous because once they have the infrastructure built and the ecosystem is populated even more than it is, it's just going to stack up revenue on top of revenue on top of revenue with hardly any new capex. And they've been very careful, unlike Coinbase, who we'll talk about in a second, they've been very careful not to piss off the regulators. So what do I like about PayPal? Again, way back here, I was talking about PayPal coming back down close to 100, which I'll be honest, it's such a good company. I didn't really know if it would get there. But here we are, probably going to have a double bottom or maybe one more little leg down, and I'm going to sell some puts. We've already sold puts on this once. We almost bottom ticked it, and you could have closed out those puts. You can even close them out now for a profit and sell a new batch out here in June. I'd have to pull up the article where I talked about selling puts on PayPal. It was that 2 months ago. What were we selling? The Aprils, the Mays? I don't remember right now. But those are something that you can take profits on, then sell a new batch or roll them, whatever you want if the price is right. I like selling the $110 PayPals and getting $10 for them. I don't remember if the premium's quite that high, but there's enough volatility that I think you can get it. And that's a pretty darn good price. A net price of 100 on PayPal. I think you should be thinking about how much of it you want, not whether or not you want it. And in my book, between Square, PayPal, and Coinbase, the three of those probably can be 6-ish% of a portfolio, 2% each, right? All half positions. Then there's some ETFs that I'm looking at. I was going to use DApp, but I decided it's too small. So there's an Amplify ETF for those of you who would prefer to use an ETF basket. Diversify your risk a little bit, still get probably 90-ish% of the upside. Moving on, we have Hrtx that we've talked about a whole bunch of times. This company is going to be on the forefront, and already is, of helping to end or at least reduce the opioid epidemic. And the problem that they've had isn't execution. Their execution's been very good, and their drug keeps getting more indications, and they have a couple new drugs that are pretty nifty. But because of COVID, adoption has been a little slower than they would have expected, even with the government on their side, right? President Biden mentioned the problem that they're addressing in the State of the Union address, just like he mentioned by name 3 of our companies. I just remind you of something. Way back in 2009, as the stock market was getting close to a bottom, I believe it was February 2009, President Obama said, if I could buy stocks, I would. And he gave you that big ear-to-ear smile. Within 3 or 4 weeks, the stock market had bottomed. Mark Haynes went on television and said, this is the bottom. The Haynes bottom is what they call it. And it was the absolute bottom day in the market, like March 9th, 2009. I started loading up in the stock market that year at the end of January, and I went all in, including Freeport McMoran, which I mentioned because it's still a stock we use, and it went up, 7 or 8 zillion%. And I had a 90% up year in 2009. It was my best year ever. I'm not saying that we can do that again, But what I'm saying is that when the president of the United States, and it doesn't matter who it is, President Bush talked about fracking. It took a little while for it to happen. But when the president of the United States is telling you this is the future, this is where we're pushing policy, this is what we're going to support, you better get on board because you're going to miss some of the biggest opportunities in the world. Now, do I know that Heron is going to be the company in this space? There's only 3 or 4 so far, but some of the big pharmas are going to certainly try to get in, right? That makes these guys a takeover target because they're already ahead, first mover advantage. And if they don't get bought out, I think this stock goes to 100 or higher. It's 550 right now. They might get bought out for 20 or 30 and that'll piss me off, but whatever. I guess I can take 5 or 6 or 700% of my money. The $5 June 17th put, you can get about 50 cents for. That's a 10% yield for just a shade over 2 months. I mean, annualized, that's 50 something percent. Yeah, C and the X must be next to each other on the keyboard. It's right up here. And then let's talk about Coinbase. Coinbase has a leading role in the new financial infrastructure that's developing. It's profitable, and what's one of our themes? One of our themes is that we want to buy companies that are going to go onto the S&P 500 before it happens. Coinbase is $30 billion in market cap, so plenty big, and they've been profitable on and off already for like a year and a half. I believe they might get added to the S&P 500 this year. If it's not this year, it'll be next year. But I think it's going to be this year. It's really hard to keep them off. So you should probably get a starter position and or sell some puts. And, I wasn't sure where this was going to be. And I based this box based on just they're running out of sellers. And it looks like that's right about where we're going to get to. Again, it can always have one more little leg down. If you look down here on the RSI, which I'm using this is my screen for weekly. So I'm using 4 weeks, which is a month. And then I'm also using the Shake and Money Flow for a quarter, 13 weeks is a quarter. So I have different levels that I set these up at. So this is basically in line with the turtle traders. The turtle traders were the original trend traders in the market, and they would use 1 week, 4 weeks, and a quarter, 12 weeks, I think it was maybe, to really see where the money flows are going and how to get into the trends. If we go back to the screener, see if I can find it really quick. Coinbase. The trend down is very weak, right? So we know it's in a downtrend, but the downtrend is getting very weak. If this was like an 80 number, we'd be like, oh, that's a pretty strong downtrend. But it's a 20-something number. That means the downtrend's almost over. Again, we can't be perfect, but we can probably be excellent by getting really close really often on all of these trades. So I'd like you to sell the June 140, try to get $15 for it. I think it was over $15 today. You basically can get this for way cheaper than the IPO price. We know what the future of the world is, give or take, when it comes to cryptocurrency, don't we? We know that by now. We know that cryptocurrency is going to have a big role in store of value. We know that it's going to have a big role in cross-border transfers, and we know that it's going to have a big role in digital contracting. Now, what we don't know is whether or not you'll buy your pizza with it. And the answer to that is probably no. Why? Because governments don't want you to. They don't want to get rid of their currency. So cryptocurrency is going to be something that allows other things to happen that the government would like to see happen better. But they won't allow it to take over the role of the dollar or the euro or the yen. And one of the things that you should keep in mind is when the Russian government decides that Bitcoin is good, then that means it's probably, not for what they think it's for. They just want to disrupt the dollar. And ultimately, disrupting the dollar is very difficult because any currency is based on the productive capacity of an economy and the property rights and the security, all those things rolled into one. And the United States has no peer, none. There's no country in the world with our productive capacity. China and India are kind of close, but on a per capita basis, they're way below us, way below us. No country has our military strength, our diplomatic reach, our integrated financial system around the world. Why do you think we bail out our banks? It's because they give us power around the world. Because we didn't really need to bail out all the banks in 2009. The economy would have been fine if we bailed the people out instead, at least in the short term. But without those banks being in the SWIFT system and being country to country and handling so many of the transfers and getting other countries to use the dollar would have been a problem. So think about the geopolitical reasons why the dollar is strong as well. What does that mean to how the Fed's going to act and how the government's going to act? So Coinbase is profitable. It's the biggest holder of Bitcoin behind MicroStrategy and Tesla, I believe. Shooter would know. I mean, they might be a little further down the list than that. Square is in there, but they're up there. All right. So I would, you need to get involved with these companies. So when we screen for covered calls, it's the opposite. We're looking for companies that are overbought and above fair value. So we pull up the screen and we take a look. Say, okay, what have we owned recently, or at least in the last 2 years? I guess I could have covered Bristol Myers. Abbv, overbought, and I think a little overvalued. Bristol Myers, I would say, is overbought, but I don't know that it's overvalued. Nutrien is overbought, and it got to our price target, and I think it shouldn't have for a few more years. So it's probably overvalued, at least in the short run. Dominion Energy is probably overvalued. I'd say almost certainly overvalued. And we can see that it's overbought. Eli Lilly, same boat as Bristol Myers. I don't know that it's overvalued, but it's overbought. Berkshire Hathaway, overbought, but I don't think overvalued. Kroger is probably overvalued. Go right down the list. Newmont Mining I covered today, then Occidental. So why don't we take a look at those? What's the story? Abbv, it's dramatically overbought, and I think it's pulled a lot of its profits forward. They carry risk of margin contraction and revenue growth pressure. So I think if you own it, if you bought it a few years ago with us, trim it. You finally time to trim it. Add some extra income by selling covered calls. Nutrien, I've talked about a couple times in the last few weeks. Big winner on the Ukraine invasion. However, long term, they're going to get competition. So the oligopoly is going to have to expand. BHP is the company that's going to get in on that. And I'm sure there's a few others, but BHP is the big one. They already have the acreage in Canada to go and get the potash. Newmont Mining, and I haven't mentioned this very loudly, but I think it's time to be out of the gold miners and just into gold. I think gold is probably heading to 3,000. I said that in early 2020. I think that rally is probably coming over the next few years, certainly by the end of the decade. And if you're trading options, that's where you make the big money, because there's nice volatility in gold. And then, of course, I've always said, just have a few pretty coins or little teeny tiny gold bars because they're cool, and you can say you have some gold. And then Occidental Petroleum, it's destined to be owned by Berkshire Hathaway with a warrant. With the warrants, it's going to be around 24%, and I think the buyout price is going to be in the 60s. So there's not a ton of upside, but there's very little downside because of the Berkshire connection. So what do? I think you trim your Abbv position if you have it by 20 to 30%, and max pain is around 155. So that's the direction the price is going to go. So if you can sell the 165 put and collect $10, it may or may not get called away from you, but you'll have the $10 and you'll have sold some at a profit before it goes down. And that going down process looks like it started in a lot of places, right? Nutrien, same thing. Trim 20 to 30% of the position. Max pain is around 80. You can get around $15 for the $90 covered call, which is in the money. And but 90 plus 15 is higher than the current price. So I think a pretty assertive trade would be to sell these covered calls at 90. If you want to sell the hundreds and get less money, that's fine. But I think this is a pretty good trade. Newmont is a stock that we've owned a couple of years now. We bought it, in the 30s? I'd have to take a look. Again, trim 20 to 30% of the position, get some more cash on deck, and then sell the 75 for $8 or more. Max pain's at 65. So 8 minus 75 gets you close to max pain. If it gets called away, so be it. If it doesn't, you get $8 in your pocket. Then Occidental, same thing. I think you can sell the $60 put. You'll get $5 for it. It's a real nice annualized rate. I think that accounts for probably right around where the buyout price is going to be. And even when they announce the buyout, I don't think it's going to happen super quickly, right? These things never do. It'll take a number of quarters, if not over a year. And in that time, you probably can do something with the calls. You might be able to roll them out. We don't have any rollouts that I wanted to talk about today. We'll do that next week as we get closer to option expiration. So next week, you should be making a list of your options that you're wondering about. Should I roll them out or should I let them execute? And you can go ahead and, put those questions right here in the comment section. We have comments over at Fundamental Trends too. So if you have questions, put them in there. I check them once or twice a week. So remember, sentiments in the market can pull forward or push back a stock's price versus its fair value. Right? That's the essence of Warren Buffett's quote. In the short term, the market is a popularity contest. In the long term, is a weighing machine. So we're trying to take those backwards looking narratives and the stampedes and all the little movements that the traders make happen and the public makes happen and pushes things above and below fair value. And we know that the institutions are pretty smart as investors go. When they get super interested, that's when we want to get super interested. And again, you can trade anything in between, but the best time to buy is down here where the institutions are accumulating. The best time to sell is when the little guy pushes it up because of the limited float, right? The reason why the little guy can push things up, because there's not a lot of shares that are traded, because the institutions own 80-90% of the company already. Take a look at the institutional ownership. A company might have 1 billion shares, but of 800 million are owned by the company, by the hedge funds and the pensions, right? Look at that. This box pretty darn close to the 618 and 786 fibs. Interesting, right? All right. Any questions? You could sell puts on Stone Cold. Came off of its super oversold. Now it's drifting back down. We'd have to ask Shooter how much down it has, but what is it? It's really $11 a share right now. Yeah, $11 a share. But look at that basing. I mean, that's a pretty good base. I mean, could it go down $1 or $2? Sure. I already own it. I've got it as much as I want. If I get one of those sell-offs down to 5 or 6, I'd probably sell puts just to defray my cost basis. But I already own as much as I want. If you don't own Stone Cold, I think you definitely sell a put. Try to get a net price around 8, right? Strike price minus premium. You want it to equal around 8. That's the previous bottom. Yeah, I think Ametis. I mean, could Ametis get down to 9-ish? I think it could for sure. Will it? I don't know. I mean, I just think that's so constructive. This is. I mean, it got to where I said it was going to get to. It's been building and building. And what do we know about energy? The whole thing is shifting. The whole energy system is shifting. Ametis, New Fortress, they're going to be big winners. I'm actually writing articles about both of those. Remember I told you is I'll stop dribbling out information on the companies when I feel like we all should own it already, and then I'll send it out to the public. Well, Ametis and New Fortress, I'll have articles on Seeking Alpha next week on those. So, look for what you want to do. I haven't been in Barrick Gold for a pretty long time, so it's up to you. It never really ran like Newmont, and why is that? It's because Newmont's in the S&P 500, right? And it moved quite a bit with the S&P 500, whereas Newmont. So if we add SPY and we add Barrick, you'll see a divergence here. Use the right one. Let's use just 1 year, right? Newmont crushed Barrick. And if we go back to 2020, Newmont even beat the S&P 500. If we go right to the bottom, Newmont's in blue, the S&P 500 is orange. They didn't take the same path to get there, but remember alligator jaws? Alligator jaws right here, but then they closed. Barrick's way behind. So I would expect now that S&P looks like it's going to have a correction, Newmont will follow it, then probably Barrick keeps up, but I'm not so sure that I want any of them anymore. Because I think that GLD, look at that, just been basing. I think GLD is going to close that gap, right? Alligator jaws way up here and way down here. I think gold is going to be the winner going forward. So I want gold. And I actually did mean to talk about PBW, somebody asks about. I think it's got one more leg down, 50-ish. So I'm not quite ready to sell cash secured puts on it again, because I already have some outstanding that would get me a price of 50. I think they're $56 puts, and I got $6 for them quite a while ago. It was the same time where I woke up one morning and I had some of it execute. I think as it gets down here close to low 50s, I think that's when we look to sell more puts on PBW. If you have no position in PBW, yeah, you could sell like a $52, $54 puts if you wanted as your very first foray in. If you already have a position or you already have puts outstanding, I'd wait for it to go a little bit lower. And I'm going to find a shooter's chart on this for the global trends article that I'm writing. So just so you're aware, the global trends article is almost done. And it's going to be a monthly article with weekly updates on just a few things that have moved. Cash levels, you should already be conservative. And I'm putting together what I like, amplify plant economy. I'm torn on this, but I think I'm going to have you buy a little bit of the Grayscale Bitcoin Trust, and you'll have to decide if you're comfortable with that in an IRA. I generally buy I've bought all my Bitcoin and Ethereum just in, at a Coinbase account. But if you want to give your IRAs a little bit of exposure beyond some of the stocks we're buying that have some exposure, you can buy a little bit of Grayscale. And I mean a little bit. Like, it's going to be a 4 to 8% sort of thing, because if you add more and it tanks and the government goes nuts on it, you don't want to lose 20-30% of your money, right? But I think that we're certain enough about it in the long term, and the Grayscale Trust is at such a discount right now, right? If it was at a premium, I wouldn't want it, but it's like at a 20-25% discount. It's trading like a closed-end fund. That's essentially what it is. So I think that the Grayscale Bitcoin Trust is going to go in here. There's another Amplify fund that I'm gonna put in here. You'll notice that I got rid of ARK. The reason I got rid of ARK is I just haven't liked her trading. I would rather just own the Invesco Next Gen 100, and PBW is a relatively large holding. So this is something that you'll scale into. And if you want to be even more aggressive, and I'm going to write about some of the alternatives down here. If you want to be more aggressive than PBW, you can certainly use TAN. If you want to be really solar focused, and they've dialed back their China exposure, so that's good. You want a little China exposure, but you don't want much, right? You just want to kind of in the middle of your barbell with everything else. All right, let's call it a day. I hope you like the new formats and the new webinar layout. This will be the way it is every week, and we'll try to buzz through it in 20 to 25 minutes in the future, but we got a lot of ground to cover, and this will be up on the interwebs after the market close. All right, take care.